You're looking to move, but if you list first, you'll sell your home with no place to go. If you buy first, you'll be stuck with 2 mortgages. Let us walk you through the safest way to do both without panic or financial risk. We've helped dozens of homeowners in Minnesota with this exact same situation without leaving them homeless or broke. We'll cover financially, how do you make that happen? We'll also cover what contingencies or legalities and offer you'll have to have in place to make each situation work, and also who does this situation work best for and how do you do it? Drop a comment below. Which one scares you more, buying first or selling first?
If you are financially capable of being able to purchase your house before you sell it, generally I find that the best scenario, because then you can go out, find the home you need, take the time you need to find that proper home, place your offer, get your offer accepted, and then you're able to make a slow move. You can get your stuff out of your house that you want to sell, get that decluttered, and get moved in and comfortable there. Then you can get your house ready. It's generally less stressful. Of something to add with that, if you do purchase non-contingent moving forward and you want to list your house, there's a chance you can match up your close dates so you really don't ever have a double mortgage scenario if you can get those close dates to match up. Again, if you have that financial freedom to be able to purchase that one first before you sell.
There's a few strategies you can take when it comes to crafting your offer or using contingencies to make the time frame in buying a house and selling your house work. So case in point, here's one of the better strategies we can recommend to a seller. A seller can list their house. They can accept an offer based on that seller finding a property of their choice. So as long as the buyer agrees to it, the buyer can essentially wait on closing date and the seller wait on a closing date until this seller finds the property of their choice, and then you can match up closing date. That's a really efficient way to be able to find something and be able to sell your property and close on the same day, regardless, and not have 2 different mortgages. All of that can work in that scenario. Another contingency you can do is you can sell your house and then get what's called a rent back, where close, sell on the property, and then if the buyer is open to it, you can rent your house back at the mortgage that they have typically and stay in there for a month or 2 or 3 while you find a property. Gives you a good chance to be able to get all the cash that you have from the house, stay in that house for a few more months, be able to find the house you're looking to go to. The most common situation that people will do is where they'll buy a house contingent on the sale of their home. So in Minnesota, we have a rule when it comes to that. That is the only offer in Minnesota that you can bump. So what that means is if you have a house to sell, the highest priority needs to be of you getting that house to the market as soon as possible and selling as quickly as possible. Because a week later or a few days later, if a buyer that doesn't have a house to sell makes an offer on that house, they can call your contingency due and become first in line. That makes sense. That is one of the, I would say in a way, riskiest when it comes to getting your offer accepted. A lot of sellers don't like to accept offers, sale of another property, adds another layer of risk to them. But that's one of the simplest way and maybe most common way to be able to do it. But understanding the other two is really important to be able to put yourself in the best situation possible.
A client that I helped this year had a very similar situation where they were able to purchase a home without selling their home. So we did, in fact, find that home. They got it under contract. We actually put a longer close date for them. That allowed them to prep and get their house ready for sale and get their house sold and under contract. And we actually closed the same day, but they didn't use all of their funds from their closing when they went to buy their other house. They actually saved some of the funds to do some of the improvements they wanted to in the home they were purchasing. And then they're going to wait about 2 to 3 months to figure out if there's anything else they want to do to their home, and then take the rest of their proceeds. Is what it's called is recasting their mortgage. You generally can do that one time. I think you need around $20,000 or more once you do it, but it doesn't change the terms of your loan. It'll readjust your payment. So case in point, they used $50,000 to do updates, had $100,000 left. Once they sent the $100,000 to the bank to recast their mortgage, and they were able to readjust their payment down with that $100,000 added onto there. And that was a great scenario for them.
Does that sound complicated? It is, right? I did exactly that exact same scenario. The last house that I bought, I'll explain it again, maybe even easier if I can. I had a HELOC on one of my rental properties, and I opened up the HELOC to do the down payment on the purchase of the new house, right? And I also used some of the HELOC to help update the house that I was leaving. I moved into the new house, did updates on that house, stayed in my house for a little while, moved into the next one, then prepped my house A, for sale. Then once that house sold, then I was able to take one. I think the greatest thing about it is I can make offers that aren't contingent upon me selling my house and having that rush and stress of having to do that. It then also gave me the freedom to take more time to move into the next property, update the house before I get there, or fix the little things about that house before I get totally living in it and I forget about all the problems that came up in the inspection report. And then also give me a chance to prep my house, the current house, correct. And then after I get the proceeds from the funds of the sale of my house, I then can do exactly that same thing and take those funds and recast my mortgage and get down to exactly the same payment that I would have had I closed on the same day. So it's a strategy that's really complicated and it sounds really complicated. I totally know. But being a seller that has that situation or has all those options is why it's so critical, I think, when we have those conversations with sellers to understand all their options, because all the time they always assume I have to buy the next house contingent on the sale of my house. It's like, well, you got about 4 or 5 different ways we could do this based off your situation. Here's how we make it the least stressful to make this as easy as possible. So understanding all your options is critically important, even though it's as confusing as it sounds, even to us as we talk about this, right? We both looked at each other. I'm like, hey, does anybody gonna understand what this means? But I promise you, there are options. So I think here's the thing to do. Click the link below. See if you can get in touch with us. If you ever have this scenario or don't know what to do, we'll give you the free advice. We'll just tell you how to do it. Here's your options. Here's what you do first. And the number one thing you do first, see if you can get pre-approved for that next house. As soon as you get to figure that out, then you'll know what options you have. If you don't have that option to be able to do it that way, well, then you got a couple of different ones that maybe you can access. But understanding what those are going to put you as the seller and as the buyer in the best position possible to make the smartest decision with the least amount of cost and the least amount of stress. Subscribe for more real-world solutions.